Hey everyone, I'm Jeremy Szafron. You're watching Kitco News. And if you enjoy our deep dives into the financial markets, do me a favor and hit that subscribe button below. Well, today on the show, we're looking at a striking report from the World Gold Council. Central bank net demand totaled 290 tons in Q1. That's the strongest start to any year on record. China, Turkey, and India all leading the way. Now, this increase is fueled by a combination of high retail demand and strategic acquisitions by central banks, hinting at global economic uncertainties. Interestingly, this comes at a time when China's economy has grown more than expected, hitting a 5.3% increase in the first quarter, which is above market expectations. This raises questions here, like why is China, with economic supporting performance beating market expectations, still aggressively building up its gold reserves? And what does this mean for the stability of the global economy and the gold market? Well, today's gold prices have dropped just below that $2,300 mark per ounce. What's driving this downturn? Joining us to unpack these developments is a veteran financial analyst who quickly rose to prominence on Wall Street. He managed several hedge funds and even a mutual fund named after him. Peter Grandich, founder of petergrandich.com, joining us now. Peter, thanks for being on the show.
Always my pleasure. Thank you.
I appreciate this. We got lots to unpack. Let's start with gold prices. I mean, today we've seen gold prices take a little bit of a notable drop here, now trading below $2,300 per ounce. I'm curious here, Peter, what's driving this sell-off and how deep do you expect this correction to go after gold's recent highs?
A couple of weeks ago when we first reached 2,400, I actually, because I've been long since 1,200, suggested that we're going to see a correction and consolidation and take anywhere from 5 to 25% off. And I knew right away the market was overextended because the big bulls wrote me emails and told me, "You're crazy. I'm never selling a dime of my gold." And it really needed it. You know, I've said this now for the last 2 weeks. The longer we consolidate and correct, the better opportunity for those that had these much higher targets in the 3, 4, 5,000 and beyond to happen. It was very overbought. It's healthy. It's needed, and not quite certain we're ever going to know the exact time when it comes to an end. But I do think between 2250 and 2450, we'll see a consolidation correction. And like I said, is the least resistance for gold still is up. I'm not looking for anything much below 2250. And if it happened, then we might have to start rethinking our long-term projections. But right now, I think it's still much higher over a longer period of time.
Over a longer period of time. You mentioned those specific support levels, you know, that 2,300. Talk to me a little bit about what the timeline that you're seeing that look in this correction while we have some people profit taking.
You know, timelines are very difficult now. Markets, you know, I've been doing this 40 years, and what people used to expect in 6 months, sometimes they expect it just in 6 hours now. So people are very short-sighted, and it's a very volatile, a very volatile situation. But I think at best, the correction has days to a few weeks. But I think as we get into summer and all, if we haven't already, we'll be moving back up. And my original objective of 2536, clearly before we see cold weather again, will have been achieved. After that, if we're fortunate enough to get to that level, I'll take a second look. But right now, I still feel quite positive longer term on gold.
Okay. I mean, there's still some room to go there, too. Peter, in your last chat with us at Kitco News back in August of last year, I was just watching it this morning. And speaking to our editor-in-chief, Michelle McCory, you mentioned that the possibility of China leveraging geopolitical tensions to divert attention from their domestic issues. Here's a little bit of what you said.
It's certainly moving to the negative side of the fence, not yet ready to fall off because they still could make some dramatic monetary changes that can change that. The hidden concern, what I'm deeply concerned about is, you know, governments, like when people start to suffer, they like to take their minds off it. And one of the ways governments take minds off it is getting themselves involved in wars or battles and expressing to people, listen, these people are bad and they're going to hurt us, so we need to go do this. This could actually expedite whatever their long-term plans was regarding Taiwan. And that would be another geopolitical firestorm that I don't think the United States is even close to handle, and so forth and so on.
Yeah, I mean, interesting thing that you just stated there, because recent data indicated that China's economy has grown faster than expected. with a 5.3% increase in Q1. Obviously, this is China's data, but how does this stronger economic performance impact your view on the potential for conflict still with Taiwan?
Yeah, first of all, you're absolutely right about data from China. It's not something that I would sleep on all the time, but nevertheless, I think as we see, especially key world experts, people in military and all, see more and more, it's more likely now than ever that some aggression more than they've done on Taiwan is about to happen. It's in their blood. It seems to be that they must unite, whether or not it ends up because of an actual invasion or some sort of Hong Kong type of deal done. Remember, we all were told when the Hong Kong deal was done and the British left, China will never go to take it over. It'll just become like a satellite. And it obviously didn't. And I think they may try that way. And I think a lot has to do with who's in the White House over the next 4 years. I think that can make a dramatic difference on how China acts as well.
I mean, given the positive economic momentum, though, if President Xi is smart, is China focus a little bit more on sustaining this growth rather than engaging in, more destabilization in the region, doing something like war?
Yeah, you're right. And I don't think it's as strong as people think. I don't think they're anywhere out of the woods yet, uh,
Yeah.
based on real estate and all that. We may even see somewhat of a devaluation of their currency as a move. But I think where they're really strong, and I think it's the story that Wall Street continues to miss, and that's the growing influence and strength of the BRIC nations. And what happens in October and how many actually new countries join up and how strong that is could go a long way to decide how China may or may not act on Taiwan. I'm not looking to cop out on a call. I'm just saying I think that is going to be as critical to them, if not more, than what may happen in Taiwan.
Yeah, I mean, the World Gold Council is reporting that central banks, particularly as we just discussed, China, have significantly increased their gold reserves in Q1. Here's some details just so that we have them. The People's Bank of China reported adding 27 tons to its gold reserves during this quarter. This marks the 17th consecutive monthly increase, helping to lift its strategic holdings to 2,262 tons. Try saying that 7 times, Peter. Now, this is the PBOC's longest ever reported streak of monthly gold additions to the gold reserves. And this pushes the gold share of the total reserves close to 5%, close to 4.6%. That's notably higher than the 3.2% share it had back in October. I'm curious, what's motivating China here? I mean, a recent article in the Telegraph said that this could be an economic safeguard against potential Western sanctions to events of a conflict over Taiwan. So is this what's happening? Are they kind of hedging here?
Well, let me just take a step back and tell you what my single biggest reason why I still remain so much bullish on gold. If you think about the enormous amount of physical demand that there's been in this move, while other areas where you would expect to be seeing people adding to gold, they've been actually selling. We've seen exchange traded funds drop down. We've seen a lot of people who have not yet come to the table, and yet we saw such a dramatic, strong move overcoming the paper market, which normally has proved a key resistance at times to the market. So there's someone or some group has bought it, not for a trade, not for speculation. And I obviously believe it's because of some great change they see coming down the road monetarily. And I believe it ties into the BRICS. And I believe China will lead the BRICS. So it's in their best interest. And quite frankly, if you're a country and you hear now rumblings and strong rumblings from both our Congress and this administration about taking the money that's been frozen by Russian assets and giving it to the Ukrainians to use as they see fit, that's enough reason, not just for China, but just for mostly any other country to say, hey, what happens someday that they don't want to do that to us as well? And that's the underlining flag waving, hey, you need to join the BRIC nation movement. And if we continue to go forward, and it's moving forward in our Senate and our Congress to do so, I think that's just another reason for China. And let's not forget, China has sold a dramatic amount of their U.S. bonds. They have really moved out of the Treasury market and no longer participate in a big way. So, yeah, I believe it's gold is a comforting factor to them, and I suspect that they'll continue being a buyer of gold, but maybe during this pause, look to buy it on any sustained weakness.
Yeah, I mean, it's so fascinating. I'm curious, how does the approach of the US and the European central banks in managing their gold reserves and obviously economic policies compare to China's aggressive strategy? What can we learn from these differences?
Well, there's a clear difference towards looking at gold versus the so-called West and the East. The aggressiveness is not limited there. We've seen it in India. We've seen it in other places. But I think what's most important is people seem to forget that gold is one of only 3 tier 1 assets considered in the world: stocks, bonds, and gold. And another, I don't want to say it because it just will create all sorts of emails, but another play, because I don't call it an asset, had taken some of the excitement out of gold, but we've clearly seen now where real big money is heading. It's heading into gold. And for reasons, like I said, that I think are enormous, are going to take a dramatic change in the monetary system eventually, because people realize the United States and its troubles are only getting worse, not better. And its days as the world leader is not at the end, is coming to an end. So all in all, I just think people have recognized for what gold has done for a couple thousand years, and sooner go with something that worked for a couple thousand years than just worked for a few years and simply isn't the greatest thing that some people make it out to be.
Yeah, Peter, I won't take you down this path for too long because we'll look out for the comments. But don't you think that even with this whole crypto buzz, I know you're such a fan of Bitcoin, with this whole crypto buzz, that some of these buyers, because it is a hedge, have still looked towards the gold market? We've still brought in some of those investors to the gold and the commodities side.
Oh yeah, we definitely have, and you're right. So you might as well full-fledged get all of them. I call it Bitcoin. I think it's the greatest, most overly hyped investment product of the modern era, and I think tulips would even be jealous. So that ought to set up the amount of people. But I do think, in all seriousness, is how do you not how do you keep throwing gold under the bus and calling it a relic and calling people like me who talk about it dinosaurs when you see this dramatic move that has occurred? And let's not forget one idea. Let's give it its credit. Not only has it been outperforming stocks for bonds for 3 or 5 years, excuse me, since January 1st, 2000, it's outperformed stocks and bonds. But you would never know that by the type of coverage that it receives. So I believe it's still the single best hedge for concerns, monetarily, otherwise. And like I said earlier in our interview, I still think its best days are still in front of it, not behind it.
Well said. Well, it looks like central banks seem to have a little bit of that thought too. Okay, previously you projected a possible recession for this year in 2024. I'm curious, looking back at it now, considering the economic indicators and some of the data that we saw, such as global GDP growth and a little bit of market stability, do you still foresee a downturn here, Peter? I mean, what's your forecast for this year?
Well, the only good news of that forecast was I was one that talked about very few, if not any, interest rate cuts. We still haven't seen a recession as we know it. Some will argue that there's been massaging of our employment numbers and all, but there's one thing that is, I think, clear now. We're in a slowdown, and we're still seeing inflation not moderating, but actually revamping and rising again. It's brought a word that really was not used except through the early 80s and then was put on the shelf, and it's come back now. And that's stagflation. And that is evident. And that's probably the worst of all worlds, to see a slowing economy and yet inflation not declining. It's certainly not beneficial for those who have argued that Biden economics was going to be the answer to our woes here in the United States. We're seeing many people recognizing it, and it's become the number one issue for our upcoming election. And I think it will remain that way, because I think the economy overall is going to weaken, not get stronger.
Yeah, I mean, let's talk about that election, not just your projection. We don't need that necessarily, but just this curious notion kind of about going into an election year. Obviously, in history, we've seen the economy do quite well throughout those times. I'm curious how much of this policy going forward is political. It almost seems like we make these plans sometimes and we don't really feel the what's happened or what the causes or the downfall of it for a few years later.
Well, I've had 5 reasons to take the most bearish stance ever in my 40 plus year career. The first is the debt spiral that continues. The second is the retirement and aging crisis. 65% of Americans are working paycheck to paycheck. They're not in any position and they're getting more hurt based on this economy. The third factor was the immigration, what I called an immigration economic invasion. I'm not here to decide who's the right people, who are the wrong people. Is it justified for them to be here or not? But I will tell you this, most of the people coming are coming with basically their shirts on their back. And that's going to be an economic weight to the United States. The fourth is the BRICS that we decided. But Jeremy, the fifth is the worst of the problems because you would expect it to fix any of the other problems we have. And that's the political paralysis we now have in the United States. Not only do the Democrats and Republicans are unable to work on anything worthwhile, but each party is now having a splintering of members moving far left in the Democrats and further far right in the Republicans. And so when these issues become paramount and are going to demand action, we don't have the groups necessary politically in order to take those actions. And I think that's the biggest problem, way past no matter who wins the general election. Political paralysis is going to be one of the biggest issues in the United States for years to come.
And do you think that significant policy will shift, be it a Trump White House or a Biden White House, or do you think this is still, kind of a similar outlook?
Well, I'll just say this. Half of America is really going to dislike whoever wins. That's how divided we are in the United States. There is no middle ground anymore.
Yeah.
And the problem is, no matter who wins, there's going to be another half of the society that doesn't really want to see them be successful at all. And that's just not the American way. And I must point out, Canada is facing the same issue as well. And these were the world's two biggest trading partners, and it will impact both of us. I have this joke, Jeremy, and I hope it doesn't even cause worse enemies. But I feel if the United States and Canada each traded their leader, the other side would say they got the short end of the stick. So I think there's a lot of issues both here and north of our border politically that aren't going to go away and are going to impact negatively overall.
Yeah, it seems like there wasn't a ton of forethought or foresight when they were making some of these decisions years ago. Peter, let's turn our attention over to silver. It's often seen as gold's more volatile counterpart. How does the current economic landscape look here for silver? I mean, it's currently trading down 2.8% on the day at above $26 an ounce. There's got to be some distinct opportunities. We know, obviously, its appeal is a little bit different than gold here.
Well, I used to get in trouble at the shows because the silver bugs would get mad when I would say silver was like kissing your sister versus owning gold. But it's changed. And I think the fundamental argument now for silver, it's certainly the best it's ever been that I've ever seen it. The industrial demand and the drop of real above ground silver supplies. I think when the next leg comes back up in gold, silver will run with it and maybe even get to the point where it can lead it. And that, of course, will be in the latter stage of whatever that bull market that's still to come that I believe in. But I think at least it has a worthy argument now to be in the same ballpark and maybe be in the same lineup with gold. When years ago, I've always placed it a distant second, and that always used to cause some people some agitation.
When did this start? I mean, when did this more attractive risk-reward profile potential come up about silver? I mean, was it right as we started to see gold prices start to climb, or was it before when we started to learn that there might be a larger demand for it?
I think the combination of both we just said, the demand increase came evident a while back, but because when gold finally broke through the 2100 area and started to really, get very rallying, I think some people then started to look. From retail investors, they always tend to like quantity over quality. Not to say that gold outweighs tremendously, but a lot of retail people like to buy things. They'll buy $1,000, 1,000 shares of $1 stock versus 1,000 shares of a $10 stock, simply because somehow they think they're getting more for the price. That's always been the same when it comes to silver as well. And so it's going to take more retail interest for silver in general to move. And I think that retail interest comes, A, when we finish this correction consolidation, B, when its biggest competition is breaking down, and as we speak, certainly Bitcoin is, and third, the overall market. But here's the one mistake I want to warn anybody who likes the metals not to root for. Don't root for a crash in the stock market. It's not in your best interest. Markets need to roll over and give people a chance to move money from one end to another. A crash will do us no good because no one's going to run out and say, with the stock market crashing, bonds going up in rates, buy me some junior resource stock. That's not going to benefit those of us that have interest in the smaller mining and explorations companies. And so a rollover in the stock market and cryptocurrency will be much better than a sharp sell-off.
Yeah, and I don't think the sell-off, it looks like, is coming anytime soon. Would you agree with that?
In the general equity market, I believe we're putting in a major top. And of course, I really think I said, and my record will show it, I said until they would get this reduction, whatever you want to call it, in the Bitcoin, until that would occur, the halving, you were okay. But after the halving, nothing's going to be there to support it, and it really is going to break down. And I think also you're going to see some technical selling in that market because below 60,000, there seems to be a top that's been put in. So I wouldn't surprise me to see Bitcoin back in the 50s and 40,000s before there's any opportunity to mount another rally if it's to happen.
So 40 to 50 on the Bitcoin side, and what you're saying is you think that maybe that liquidity in that market might go over to the equities?
No, go over to the metals market. I think people who have bought Bitcoin bought it for the right overall opinion, but chose the wrong product for that. And that's why I think we'll see a more interest in gold and silver going forward as that market rolls over. Listen, I've already eliminated any invite and all Christmas cards removed from the big crowd count. But the bottom line is I'm quite serious in that. And I really think that's a plus for gold and silver as the cryptos roll over.
All right. Well, we'll keep an eye on it here, Peter. And if it goes that way, we'll have you on. Either way, we'll have you on. We'll call you out for it, too. I appreciate this. Peter Grandich, founder of petergrandich.com, joining us today. Thanks again for coming on. Great analysis here. Appreciate your time.
Thank you, and God bless you.
Thank you. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for tuning in. Don't forget to like this video. Leave me a comment. I do enjoy reading them. Well, most of them anyhow. And we'll see you next time.